Today is the 9th of June 2021 and this is a special date for me as an investor as I'm celebrating 10 years of owning shares in the company Logitech. It is so far my best investment and it is one of those few stocks where this development was obvious to me since the day I bought it. So, time to have a short reflection of this investment to see what we can learn for future investments. Hi, my name is Till and this is the channel that shows you how to invest intelligently and easily and how you build up a fortune also as an ordinary person with a normal job. When you're new here, hit the subscribe button and ring the little bell for not missing any new videos. Logitech is actually my first 10-bagger. 10-bagger is an expression that was firstly mentioned by the famous investor Peter Lynch, and it means that an investment developed tenfold. Meanwhile, it became even an 18-bagger. If you're interested in the deep dive analysis of this investment, you can have a look at chapter 18 in the third part of my Skillshare.com masterclass Investing for Beginners. It is currently available for free. You just have to log in at Skillshare.com. And even if I put it to the premium area someday, you can still watch it for free if you sign up for the free 2-week trial at Skillshare. You'll find the link in the box below the video. This video isn't meant to brag about this investment. It is of course always easy to speak about a positive development in hindsight. And I promise that I will also show some of the bigger failures I had on this channel in the future. But a good part of this development, I would even say the major part, was foreseeable. Another part was just luck, because Logitech profited with its portfolio from the accelerated trend to the home office during the Corona crisis. But these unforeseen positive developments happen from time to time as well. No, it's a fantastic example for what can happen with patient, non-conformance value investment over time. And this is why I'm also going to talk about the development of the investment itself. Then I will show you what happened with Logitech at that time and why were they so cheap. I will tell you why exactly I chose to invest in Logitech, what happened since then, and which lessons I took for myself from this investment for future investments. The development of my investment. I bought my first shares on the 9th of June 2011 and continued to buy over the next 2 years until 2013 when the stock price went further down. On average, my purchase price was around $8. In euro, it was around €6. Logitech distributed in this time frame circa $4.60 in dividends cumulated. This means that more than 2/3 of my purchase price are covered by the dividend payments. The last dividend payment was circa 87 cents for 2020, which is a yield of circa 11% on my purchase price. On top, there was of course also the development of the stock price. Today, a Logitech stock costs circa $135, which is about 17 times of my original purchase price. The development in euro is even bigger, as I benefited from the change in the euro to US dollar FX rate. What happened at that time with Logitech? Why were they so cheap? Logitech had quite a stable business in 2011, although there were some problems. Number one, the apparent collapse of the computer industry. Apple released the iPhone in 2007 and the iPad in 2010. A lot of people thought that this would erase the computer industry. It did change it, but it didn't make computers and laptops obsolete. Apparently, nobody believed that this could take much longer and that Logitech would be able to produce accessories for the new smartphones and tablet PCs as well. Number two, there were also management mistakes. Logitech intended to expand to the video conferencing business and bought the company Lifesize. Unfortunately, they paid way too much. And they were definitely far too optimistic on the development potentials of Lifesize. Another big mistake was the development of the Logitech Review set-top box. It was supposed to bring internet to the TV. They put a lot of resources in this project. Unfortunately, it failed and they had to write it off. Number 3. The style of Logitech's brand was also a bit outdated. This is usually not a big problem for itself, but it added to the impression. Why did I choose to invest in Logitech? The problems had been quite obvious to everyone who took the time to read more than 10 minutes about the company. But it seems that the strengths haven't been so clear to Mr. Market. Margin of safety number 1, a stable business. Even in the years of the problems, Logitech still generated attractive free cash flow. For a company whose business is doomed, Logitech was operative, still in good shape. Very interesting in terms of free cash flow were especially the years 2011 until 2013, when I bought my shares. Logitech reported in this period earnings of combined minus $28 million. But they generated free cash flow of combined $339 million plus. You know from my 2 video series on free cash flow that Wallstreet tends to look at earnings, but not on free cash flow. The stock price was certainly not beaten down due to Logitech generating $339 million free cash flow for their owners. Margin of safety number 2, a strong brand. Logitech was still the computer accessories brand at that time, with an image of high quality and innovative products. And they still worked on developing new products and improving their existing ones. Margin of safety number 3. They had nearly no debt. A quick look to the balance sheet showed and shows that Logitech was nearly debt-free. You could have paid the complete liabilities with the cash and cash equivalents, plus the accounts receivable. So all the inventories, other current assets, property, plant and equipment, and also the intangibles were an additional margin of safety. And they had an honest management. The management around the founder Daniel Burrell and especially the chairman and former CEO Guerrino De Luca spoke frankly and honestly about the problems and the mistakes at that time. In an interview with the Swiss newspaper Schweiz am Sonntag, Burrell said in 2014, "We never thought beyond the PC. We had a lot of possibilities for exciting products, but we failed. It took too long until we woke up." Guerrino De Luca spoke in a similar way at that time. "I like it when the people in charge are not only telling what they need to do to change the situation, but are also honest about the situation itself, the root causes and the drivers that led to it in the first place." What happened since then? Logitech didn't completely change. They basically produce and sell similar products today than they did back then. And of course, the collapse of the computer industry didn't happen. Mr. Market had just been in an extremely negative mood again. They analyzed their problems and strengths and made some changes that brought them back on the path of success. But those were not big changes. They didn't throw everything overboard. Management change. The first change was obviously the exchange of the CEO Gerald Quinlan. The way they handled the search of the new CEO was quite impressive by itself. Chairman Guerrino De Luca took over responsibility for the mistakes that happened in the past years and communicated that he would do something differently with the search for the new CEO. He said that it will take some time to find the right person that fits to Logitech. And it did. And when he found Bracken Darrell, he announced that he wouldn't throw him into the cold water, as we say in German, but he would rather give him time to introduce him personally to the company and the new position. Bracken took over in 2013 and is CEO until today. Bracken's first action was to strengthen the profitability. This was surprising because Logitech already had a good and positive margin. In retrospective, it was absolutely the right call because it gave Logitech the money and the confidence to develop and improve further great products and to expand the existing business and to take over new business like Jaybird and Astro Gaming that fit to the company and, of course, the room to maneuver independently. The lessons. My target for the stock was around $40, give or take a few dollars. My logic was that the company wouldn't have to completely change for this. They would just need to come back on track and to do right what they always did. And this is pretty much what happened with the business. Logitech's turnover just went up by circa 30% between 2011 and 2020. 2021 was of course a major shift. In the same time frame, the stock price went up by 600%. When you look at the stock chart, you see that it really took some years until the stock price gained traction. And when the stock price was in the area of 4 times to 7 times of my original purchasing price, I sold a good portion of my position because my target had been achieved. The rest I own until today. Today's remaining position has still a price that is a multiple times than the complete capital I originally invested. The lessons I took for myself are simple. Mr. Market is sometimes crazily depressed even for years. There are some gems out there that are worth to look at. You need to have the patience to wait until they are really cheap. It sometimes takes some time until things work out. Businesses don't change that quickly. Value investment might not be exciting, but the results can be incredible. This video is of course just for educational purposes and no recommendation to buy or sell Logitech. But I hope that it helped to visualize a bit better what is possible for an ordinary person with investing in ordinary common stocks. I'm really looking forward to your opinion and comments. What have been your best investments and how do you manage to remain patient during the time until things work out? Write them in the comment section below the video. If you liked the video and if you want to know more about investing, hit the subscribe button. Ring the little bell for not missing any new videos, and it would be great if you also leave a thumbs up.